So JPMorgan, it's a hot topic these days. Today, the latest is the CIO is retiring. What's your thought on this?
Yeah, I mean, I think if you look at JPMorgan and this announcement, this $2 billion hedge loss, it's not going to change their normalized earnings. It's not going to change their balance sheet. It's not going to change their capital ratios very much, by 20 bips probably. So this is still a fortress balance sheet. This is still a kind of best in breed company. This is a credibility hit in a big way. And so the stock, so that's the reason why we've paid a premium multiple for JPMorgan over the years, because of the strong management and again the balance sheet. Well, if the balance sheet doesn't change, but the management credibility is at issue, it could take a while just to kind of settle out and to stabilize. That said, right now at 36, 37, I do think it's very attractive for the long term. You're talking about 7 times forward estimates. And again, it really is still the best in breed in terms of market share numbers and deposit growth and that kind of thing. So my sense is let the dust settle. I think you could pick at it here. But when you have US Bank Corp trading down on the news, you look for an opportunity there. When you have an AIG trading down in the news, you have an opportunity there. So I think we're trying to look at the big picture of financials and looking for where there are these pockets of weakness to capitalize on.
And does this concern you, the $2 billion loss, if it's happening at JPMorgan with Jamie Dimon, who's like one of the most respected CEOs in the industry,
right,
where else can it be happening?
Well, I mean, I think that the money center banks, right, the big global money center banks are certainly at risk. And that's one of the reasons why we've chosen to overweight the regionals, like a USB and like a SunTrust, over a JPMorgan. But with that said, I mean, this seems like it is a special situation, that it is a JPMorgan issue. But it wouldn't surprise very many people if it happens to other global players. That's why we're not really overweight those names or that part of the financial services sector.
And then just as far as regulation goes, what do you think this means for that going forward?
Well, it can't be good, right?
Yeah,
I mean,
right.
So, but I think, these stocks are trading anywhere from 7 to 10 times normalized earnings. It's kind of discounted in the valuations here. In the meantime, by the way, JPMorgan, you get a 3.2% dividend yield, which is super safe and likely to go higher. So, this is not a perfect situation by any means, but I think you do want to take advantage of, again, the best in breed and the best quality names out there on the decline.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to